Hi, I'm Gabby Parsington and this is Smart Money, the show where we lift the lid on the hedge fund world to show you where the masters of the universe are buying and selling. It's been a historic weekend with the Fed slashing rates to new lows and priming its big bazooka to support the market. The week that preceded it will go down as perhaps the most memorable in living stock market memory, with record up and down days. Today we're going to look at a classic example of a director that knows his business well, taking advantage of a major correction in epic proportions. Robert Small is a director of TransDigm and has a net worth of some $1.2 billion, the majority of that made up in the market value of TransDigm stock. And as markets have collapsed, Small has gone big in his ownership stake of the firm. Let's take a look at the firm and Small's purchases. The TransDigm Group Incorporated was founded in 1993 and is headquartered in Cleveland, Ohio. It is a leading global producer of highly engineered aircraft components used on nearly all commercial and military aircraft in service today. The firm designs, manufactures and supplies aircraft components internationally through three segments: power and control, airframe and non-aviation. Its market cap is $22 billion with $5.2 billion in revenue and a net income of close to $900 million. Not only is the stock market in turmoil, but as a supplier to the airline industry, conditions are especially tough for TransDigm. Last week, Small purchased a little more than 357,000 shares for an average price of $476.51 in a series of trades with a market value of $170 million, taking its total holdings to little over 1.75 million shares worth $836 million. The firm's return on assets of 5.5% is among the best in the industry, beating the average of 4.11%. Its profit margin of 17.52% is also among the best returns of the industry, outperforming 87% of its industry peers who average 5.98%. Its price-to-earnings ratio of 22.23 suggests the firm valued on the expensive side, which is supported by its forward price-to-earnings ratio. Earnings per share has grown by an impressive 21.8% over the past year, and looking at the last year, the company has shown very strong growth in revenue, increasing by 43.95%. Technically, recent price action represents a colossal correction in pricing, but when viewed over a multi-year period, it becomes clearer as to why Small was so keen to grab as much equity as possible. As always, please do your own due diligence before making any investment decisions, and I'll see you next week.